At Home Depot, it's up 3% today, despite a slight miss on the top and bottom lines. Its second straight quarter of missing estimates. Investors were encouraged by the company standing by its full-year guidance, expecting comparable sales to rise about 1%. CFO Richard McPhail also told CNBC that comp sales in July were up 3.3% from the same quarter in 2024. It's the best monthly comp of the year. So sticking with retail, Target is set to report earnings tomorrow before the bell. The stock is tracking for its third positive month in a row, but it's still under pressure this year. It's down 22%, lagging Walmart, which is up 12%. So could tomorrow's numbers show that a turnaround is finally here? Well, with us is Bernstein senior research analyst Zihahn Ma. It's great to have you on, and let's start right there. What are you expecting from Target tomorrow?
Thanks for having me. I would say I don't think Target is really out of the woods yet. We are expecting maybe a slight beat on the top line. This is assuming Target is still doing a negative comp, but against pretty easy expectations, consensus expecting a negative 3% comp for Q2. So we think maybe a slight beat on the top line, but margins still not out of the woods yet, especially Target lapping some pretty tough comp from the year ago period where they already recovered a lot of shrink in last year's Q2. So overall, I think the quarter is going to be a mixed bag. Now, the issue here is that we could potentially get a management change coming up. So that's also another key factor that investors are watching out for, not just Q2 results, but also when and if they're going to announce a management change.
Yeah, and CEO Brian Cornell has certainly been under pressure given the results we've been seeing. So is your expectation that you could get something like that tomorrow when we get earnings?
It could be any day. I can't say exactly when.
But you do think it's coming at some point?
It's coming because his last agreement, he basically had an agreement with the board to stay on for another 3 years. That agreement happened in September of 2022. So it's fair game pretty much any time from now.
We've seen record numbers of container imports into the West Coast ports. There's been a pull forward in inventory levels. How much is that going to matter for some of these retailers like Target that do manufacture so much of their stuff overseas?
I definitely think tariff is going to be a wild card going into the second half. Frankly, so far, among the consumers, we have seen some price increases on shelf, and retailers are trying to pass on some of the tariff-driven cost increases. Consumers have been okay from a reaction perspective in Q2 so far, but that could change going into the second half of the year. We don't quite know if and when inflation starts to outpace income growth, for example. Are consumers still going to be as resilient as we have seen them so far? Can elasticity turn a lot more negative? And retailers are trying to manage similar uncertainties on their side, right? How much inventory do they hold right now for the Halloween and holiday season? If they hold too much, they run into an excess inventory situation. If they hold too little and demand turns out to be stronger, then they don't get to sell enough. So clearly a lot of uncertainties they're managing through.
Okay, so you have an underperform rating on Target. What do you think of Walmart going into that print?
I think Walmart, again, going into this print, the stock has already run up quite a bit. So there could be downside to Walmart's when they report, because there's very little, frankly, they could say or do that make the stock go significantly higher compared to where they're trading at now at 37 times PE. That being said, I do really like the Walmart fundamental story over a 3 to 5 year time horizon. I think there's a lot of still e-commerce driven profitability improvement that's still yet to come through. I don't know if this quarter we're going to see a massive amount of upside to Walmart, frankly, again, given the stock is already priced for perfection. In general, I think people are expecting a 4 to 5% comp, expecting maybe a margin beat because of the RIM accounting technicality that they pointed out last quarter. But outside of that, I think on a full year basis, I'm expecting Walmart to hold guidance, and I don't expect a significant amount of upside for Walmart in Q2.
Okay. How about Lowe's, especially on the heels of the Home Depot report we just got?
Well, I think for both Home Depot and Lowe's, it's a bit less about near-term fundamentals. I do think the Home Depot July exit rate as 3+% comp clearly helped the stock price today. But I think what's really driving both stock prices recently, it's the rate cut trade, or the hopes about a rate cut trade. And we'll find out more on Friday from the Fed. But as long as the hope is that the Fed is going to continue to drive rates lower, if that brings down mortgage rates, then finally I think there's signs that we're maybe towards the tail end of a 5 or even 6 year long housing downturn, and that's really what's been supporting Lowe's and Home Depot stock price. Similar to Home Depot today, I expect Lowe's to maybe have a slight miss on the top line, largely maintain their full year guide. They'll have to update their guide because they closed the ADG acquisition in June, so there's going to be some smaller tweaks here and there, but I think it's going to be a broadly similar earnings results compared to Home Depot today, and maybe similar stock reaction as well.